So most of us are aware that our credit score plays an important factor in the mortgage approval process. But what other factors do lenders look at? And what do we do when our credit score is less than ideal? Well, Loan Officer Dee is here to help answer our questions today. So Dee, why is our credit score such an important factor in the loan approval process?
Katie, that's a great question. Credit scores help banks to identify the likelihood of a consumer to repay their debt. A stronger credit score typically indicates a lower level of risk for a bank, whereas a lower credit score indicates a higher level of risk for a bank. Your personal credit score has the ability to change frequently based upon your spending and your payment trends. Banks look at the history in your credit report to evidence past patterns and to forecast the probability of repayment on your new loan request. Your credit score factors into the interest rate that you'll be offered on your loan as well.
If someone doesn't have a great credit score and they want to build that score, what do you recommend?
Sure. One thing that I will mention is that you have to understand that building good credit can take some time. And on the flip side of that, damaging your credit can happen very quickly. First, I would recommend for every borrower to go ahead and obtain a credit report for themselves so they're aware of what exactly is reported against you. One thing to also remember is keeping your balances low on your credit cards is very important, in addition to paying timely. This would indicate if you're capable of using revolving limits responsibly, and also shows that you're not pyramiding debt for yourself. If you're trying to build your credit, don't open too many new accounts too quickly. That can basically be looked at as rapid account buildup, and it can appear risky and it can also affect your credit bureau negatively.
What other factors are you looking at other than just credit score?
Other than credit score, sure. We're going to take a look at time on job. We're also going to take a look at your time at your current residence, and we'll do a very thorough analysis of your current monthly income in relation to your current monthly debts.
All right. Well, thanks, Dee.
Thanks, Katie.
If you still have questions, give us a call, and one of our loan officers would love to help. Or feel free to post a question in the comments below.